Good morning, everyone. Officially, welcome to Market Watch Group Monday Market Kickoff. My name is Scott. I will be your host. Oh, you have a... It's cracking time. Yes, indeed. Kami's here. Good to see you. Well, that's funny. Your granddaughter's dog is Freya. Yeah, we got Loki and Freya. They're a lot of fun. What are we going to do? First, let's talk about our disclaimers and remind you that everything is for education illustrated purposes only. Nothing we do or say should be construed as a recommendation to buy or sell any financial security or product. We're not brokers. We're not advisors. Yada, yada, yada. What are we going to do? Let's talk about the opening futures, slightly down. The news, employment week. So we know that it comes throughout the week, crescendoing with the non-farm payrolls on Friday. Our posture, as expected, improved. Again, I always, people are like, well, the posture improved and then the futures are down on Monday. It's like, that's not the connection we're looking for, right? That's a little bit more causal than correlative in what we're doing. So, but we will talk about it. What does it mean for us right now? For me, quickly speaking, we're in a hiccup. We got a bullish signal, great bullish signal. We just had a surge, it popped up, new highs, pulled back, found a support level, turns, and then it paused. It's just pausing. If it comes out of this pause with a kick, new trades are valid. If you're holding a trade into the pause, and then it kicks, great. It's exactly what you were holding for. If it pauses, and then it drops and it breaks. That's the exit signal. That's the, okay, we're done here. If it takes much longer, we start to get a little antsy, right? So we're, looking for something. Okay. Mindset for open trades. That was it. You heard it. We're in a pretty tight spot of what should or shouldn't happen from right now. Certainly, if the market breaks down, we're not going to be thinking about new trades at that point. And certainly, as we are on the precipice of this, the other side of that coin, and we talked about this kind of a lot recently, and coincidentally, this is the section on our trading plan that we're working on this week, which is risk management. And one of the core components of our risk management plan that 9 out of 10 times, maybe more, you're going to find lacking, which I think is absolutely outrageous in most trading plans, talks about hedging. What's your hedge strategy? You're just going to make it an afterthought, yeah, maybe I'll hedge sometime. It's a strategy. Make it a strategy. Let's talk about what's going to make you want to hedge. What are the different things that would cause it? I have automatic triggers. We are in a position that could trigger one literally today, and we'll talk about that. Literally today, we're in that situation. Hi, Vladimir. Good to see you. Anytime that we're carrying bullish trades, we have a few on, we have a VIX at a low level, that's going to have me thinking about it, right? It's going to have me well, do I want to? Maybe. But we want to define it. Because if you don't, you're going to put hedges on, and you're going to be like, oh, look, I got it. And then you're going to be like, oh, look, I gave it back. I don't know what to do with these things now that I have them on. Part of the strategy is defining how you take profits on those hedges. Right? So, and having just accelerated from a minus 2.5 to a 3.25 over the course of 6 weeks, I'm going to orient differently. I'm going to take profit sooner right now, right? So if you buy 3 contracts of a hedge and the market drops 2%, I'll probably take that first contract and be like, bing, there's some profit. I took a third of the risk completely off the table by locking in a gain. then what? Then I'm going to probably, be even tighter, be like if I get 2 more percent. Oftentimes I want 5 on a drop, and 5 might be the first thing I'm looking for. And now I'm only looking for 2. Why? Because conditions have changed. And I've got to be water, my friend. I've got to adapt. All right. So we've talked about the opening range. Our opportunity list is full. The problem is it's basically like a binary situation where everything's going to go okay or nothing's going to go okay, in my opinion. There may be a few stragglers that make it slip through the cracks. And like I said, trading plan section of the week is 4. We're working on risk management. So there you go. Let's pull up the ES for just a quick peek at the market before we jump in. Looks like the hiccup continues. So if you're like, the futures are down. Okay. Okay, it's right there. Does this look like, oh my God, the futures are down? Or does it look like, okay, the futures are down. This hiccup, little pause doji, right? And then, of course, the SPY looks a little different, but mainly very similar situation. And Friday, we had big volume on this, kind of making this like a high wave doji, which typically tries to really find a point of equilibrium where the buyers and sellers are, have their parity. Anyway, this doesn't tell us anything, but we're waiting to see. Waiting for what? Well, do we kick out? At some point, do we kick out? Remember that this is support here. So do we kick out before we break down? Those are the two things that are the core focus. The other thing is, do we grind sideways for too long? Where it's just like, well, if we get to Friday and this thing's just still sideways, we've got to start making some decisions. So, whether these come here or here, that's kind of what we're thinking about is, when does this decide what this consolidation here is going to be? Until that point, it's going to be tough to either A, put new trades on, unless you're day trading, or B, take existing trades off. Yeah, they're not right, but are they wrong? Maybe if you put them on with a time constraint, then they may be wrong or getting close to wrong, but that's different than what we're seeing here. Let's pop into what do we have? China tensions escalate. China accuses us of violating the trade truce. We accuse them of violating the trade truce. We definitely need to, see that stabilize, because the market's very much in a seesaw position based on whatever news is coming out of the tariffs. They talk about anything positive, the market reacts positively. And you can see we continue looking at the taco trade, which, like, once you mention it, then it's like, well, it's a different concept now. Now that it was put in front of him, it's a different concept. Who knows what the implications of that may be? Does he now change tactics, whatever they were, simply because that confrontation happened? Anyone have thoughts on that? I'm curious. I'm curious. Walmart is the biggest port in the storm stock right now. We typically look at Walmart that way. We hadn't really seen it, interestingly. We've traded it a couple of times that way. But in here, it kind of is in this sideways action. I mean, it's trying to kick out of its. But, there it is. Bumping resistance. So I agree it should be considered, but it's not great just because it is. It's great when it has a buy signal. That's the way that we operate. Let's go look at the SPY. 100%. Kami said, keep the powder dry. I'm not going to bail on my existing positions until they're wrong. I'm gonna hold, but I agree with that, right? Like I said, there's nothing here until it kicks. If it kicks, then take a shot or two. Let's go look at the VIX. So yeah, I mean you can see already. Look at that. We're holding up. We were down 0.3. We're only down 0.1. We're basically flat. So this is what I was talking about, right? We got this bullish move up, pulls back. This bullish move up. And this is coming out of this. So 1, 2, 3. We pull back. We find support. We turn and bounce. Now, those bounces all look pretty similar to this. We're in day 4 of a pause. And some of the trades maybe got put on this day instead of this day, but those are likely the days you would have entered your bullish trades right now. And then the next day, it actually went a little higher, even though it was a red candle. And then the next day, it was just sideways. And then today, it opened down, but it's trying to push up. And so is any of that like, you're wrong? I also want you to keep in mind, someone asked me about day trading, and I said I would expect the day trading to be significantly worse. With the VIX where it is, sitting around 19 or so. And I'm going to go there next, Bob Walker. He said VIX opened down. But yeah. So what does this mean to us? Well, we hadn't talked about it for a while, but in our bullish markets, we talk about the concept of a hiccup. You put a bull trade on, and then it just kind of hiccups. And it's those are the ones that you don't want to stop out of if you're going to watch it end up working. Well, they tend to work more frequently in a bull market. Are we in a bull market? Not yet, but we have bullish momentum, or at least have had. Up until yesterday. Here's the posture, if you didn't see it. Long-term trend is still just kind of sitting at a 0.5, waiting to see what's next, but that's the showing some bullishness to the institutions. There's the 1.25. The trading trend is definitely improved. Definitely. Then we look at volume. And despite the fact that we're moving into a 3, volume staying at a 0.5. The volume will drop. It just doesn't stay at 0.5 or 0.75 as we move into 4 and 5 point markets, because it's not necessary for volume. Now the trend is intact and all the underlying variables have moved into stronger positions. Major market improved. The Nasdaq is now on top on the 200-day, the 133-day, the 66-day, and the 22-day. Like across the board, it's moved back into favor. The small caps have not, but as I said, Nasdaq can carry. The Nasdaq can carry a bull market for years without any small cap participation, which is why we can get it to a 0.5. We can't get it any higher until small caps start to participate. Sector rotation, interestingly, that's the last remnant. Everything's gotten to a 0.5, but that I don't. It's a funny thing. But on our scoring position, there's still enough of a mixed bag. We haven't seen enough to move it yet. The underline's there that once we do move it, we'll move it quickly. It'll go 0.25, 0.5 pretty quickly. So if you're like, how are we going to get to a 4? There you go. A little bit more strength is going to give us another, quarter to a half a point on the VIX. And then all of a sudden there's a half a point on sector rotation. And then boom, there's, that's how it comes in. Okay. Let me know if you have any questions about that. Let's go take a look at the VIX, and then we're going to get to the watch lists. Same thing. We got our signal. It kicked up here. Got to the new high. Turned over. Lower high. So de-escalation, de-escalation, de-escalation. Are we escalating? Not yet. We're pausing. You can see we're still in the down. It's pinching, but it has not crossed. What's the cross for me? I'd say 2050, 2060 maybe. This is the highest 2055, 2045. So I'd say, yeah, just like 2060, 2070, right across the top here. If we break that mark, if we kick here, bad. Catastrophic? No, I'd think maybe like 20s, mid to high 26 to 28. I don't think we're like heading into anything like these back here. I think we're through that. But certainly back into these types of situations. Which means what? Which means if we do kick, that will be an alert for what? Buying puts. 5 weeks out in time, 5% out of the money on the SPY. That's the hedge. That's what I've settled on as my go-to consistency, because then I can always have a sense of, okay, 5 weeks out, 5% out of the money. What's it cost? 5 weeks out, 5% out of the money. I try to be very, very close to that so that the pricing makes sense. We've bought them as cheap as $1.75 in this group. Right now, they're probably $4 or $5. So it tells you how they go. Anyway, let me know if you have any questions about hedge. If you don't have bullish trades on, you're not hedging. Is this enough of a signal to speculate? That's your call. For me, if you've done puts before in a market that's 3.25, I would say, yeah, put a speculative trade on to see if you can catch a little bit. If it's speculative, you're not managing it like a hedge. Same thing, right? 2% drop, take one off. 4% drop, take another one off. Trail stop at that point. See if you can get to 5%. This is not hey, I wonder if we're going to drop 10% like we talked about in previous hedges where we're going to hang on to something because it's different. And that doesn't mean there's no way it could. It just simply means we don't have enough expectation that we think it might, that we would want to put that into play. So if you're going to hedge, or if you don't have that much bullishness and you're going to speculate based on a higher low confirmation signal on the VIX, make sure you have a pretty detailed plan for how you're going to manage and exit those trades. Okay. So quiet today, you guys. How's everybody feeling? It's just Monday. I get it. You just need coffee. I'm with you. Good. It's the standard questions. You guys know what they are. Question number 1. How are you feeling? Question number 2. Is that how you wanted to feel? Do I set stops and hedges? I do not. Good question. Great question. I have, and I sometimes might, but the tendency is not to. I'm managing them more than anything simply because they are tied to other things in a correlative fashion. I don't think it's wrong to. So it's like I said, I do, I have, I will, but it's not the like I always ride with it. It tends to be without it, and then at times put it on. So when management gets tight, when you're like, ooh, I'm gonna have to do something here, then yes, of course, because then we always have a tendency, right? Really good question. Let's get to the watch list and get through the whole thing. How do you feel? Okay. Sandy is willing to put it out there and say, unfocused, getting frustrated. Is that how you want it to feel? No. How do I know she doesn't want to feel that way? Because getting frustrated is on my list too. Right? I am prone to it. I know it. It's how I play poker. You can see it. I start to get frustrated. You could be like, oh, Scott's getting frustrated. He's going to do something stupid. My wife would be able to anyway. She'd be like, oh, yeah, no, he was not good. So complacency caused by building frustration. Is that how you want it to feel? No. Great. What does that 2-question series lead me to? That tells me that my chimp is rattling the cage a little bit right now. Shaking a little bit. Okay. So I need to be just a little bit more heightened and a little bit more prudent in what I'm going to do. Thank you, Sandy, for that. I echo how she feels. So, well, that's what we have to do is we're we're calling it out. Yeah, the chimp's back there. Emotions are starting to get into a place where they could impact trading. The awareness alone is going to change things for you. That's why I like the questions. I want to know if I'm in a situation where that happens. El Jago says the gold hedge. I have to agree with you. It's an interesting one because, that is a very interesting one from a technical standpoint only. Simply because we sort of have this like long-term and short-term happening at the same time. So for us to be convinced if this is going to be the one, we would definitely need to see some volume come with it that hasn't been there before. And let me show you, if I switch this to a weekly chart, how that shows up. Now, again, what's interesting is I could be like, well, if I draw my line across the top of this down to here, even though this one didn't get there, I'm still in it. So how you draw your lines matters, and where you think. That's why I kind of drew a little extra box anyways. For me, it would have to get higher and have volume. How's that? Great observation. Okay. What time is it? 7:45. What section are we working on this week on our trading plans? We are working on risk management. The first thing you should have is your trifecta of risk foundation parameters: heat, trade risk, number of trades. Always connecting, right? And understanding. Someone made a great comment where I can only have 5 trades. That's going to come from a limitation derived from portfolio heat divided by trade risk, which then puts us into how many trades can I have? Certainly, if you're like, I'm not sure this is clicking, make sure you go into the Trading Foundations course and get into the risk section there. Get into the risk management section of the trading plan outline and dive into this. This is important. The next thing is D&E. Talk about what? How you're going to be water with your risk management. How are you going to make adjustments? How are you going to correlate it to current market posture in order to say, when do I contract on defense and expand on offense? Right? As we should always do. Contract on defense, expand on offense. Next, tsunami indicators. We talked about this. You know mine. I have a couple actually that come from the market posture. I have one. We haven't seen it, but the sector rotation will actually create a tsunami indicator, a hedge indicator, transitioning. If we see some defensive movement there before we see anything else, we're like, oh, what's going on? The last thing, and this is something that, again, a lot of places don't talk about, but, if things get hard, you don't just like trade through it like you're going to smash through a brick wall or something, right? You should be at a certain point. You should be like, hey, should I take a step back? Maybe. Based on what? Well, it's drawdown. Maybe you put a governor on it where you say, if I draw down 10%, I'm going to take a step back. I'm going to evaluate, and I'm going to make sure that when I get back in, I feel like I've identified what's going on. 15%, maybe even 20. Right? If you lose 10, you have to make 11 to get it back. No big deal. If you lose 20, you've got to make 25. That's about as far as we want to dip. Because drawdown gets worse and worse, right? If you lose 50% of your account, you've got to make 100% return to get back where you started. That's having been there, I can tell you, it's not a good place to be. If you've ever blown up an account, you know that you blew up an account. So you went from 50 to 0, not 50 back to 100. So drawdown is important to mitigate. The next one, number of losing trades. Be careful. People are like, if I have 3 losing trades in a row, 3, come on, 3? I mean, like 7, 9, 3, no. Mine is this one. If you feel, and this is a feel, you can't see this one. Mostly what we do is see. If you feel like you're out of your trading flow, where you're not in right, energized and aware, good focus, right? You feel how you want to feel, and you need to be potentially ready to take a step back. Okay, I wanted to get there because I always do that last. Now I want to do the watch list. We'll have time to do both. Don't worry. Don't you worry. Apple, hiccup is still valid. It looks like it could try to pop out of that. So there you go. Though Apple, for me, is not really a viable trade because after this V-bottom recovery, it just never broke out. It's not trending up. It's trending sideways. So this one needs a little extra. If you're any of these, it's still valid. Still valid, right? Look at the correlation. Bullish up, pulls back, finds support, starts to kick. In the kick, it's pausing. Even here, this one has like pinched, kind of like, but hasn't really crossed. I'm okay with this if I was in it. I don't love it. I'm not like, oh, this is great. No, but if it's not wrong yet. APH pausing, BAC. Financials a little bit lower today, so we'll have to be careful what Morgan looks like. Industrial's a little lower today. CLS actually for me is a setup. We got this high, pulled back, new high here, pulling back. If this thing turns up out of this, I think we're heading back towards 140. Test the old high. That looks great. CME. Oh, still going. Raise your hand if you bailed too early on this one. I did. Cisco. Cisco's holding up. And if it kicks, that's on my list. I'd add that. I'd add it. Good times. Delta, maybe. The Dow, EA. Raise your hand if EA owes you some money. This guy. Okay. I just gotta have some fun on Mondays if possible, you know. As we wait and watch, I put GE Vernova on the list. You know I want to trade this. It's just made this like freight train move, and it's never really given us what we want to try to. What do you also notice? Look at that overbought conditions the whole time. The whole time. Gold's kind of sitting still. Google, I think, is setting up. If it doesn't break the 50, if it holds and turns, next stop 185 for me. Goldman down a little bit, but hasn't broken support. So yeah, we're gonna be sweating. No one's gonna be happy with our Morgan trade. Least of all me. Howmet, IBM, same thing. I mean, I'm not. If you are still in it, there's no reason to not be thinking I should still be in it. Okay, there it is. IWM, MasterCard. Ooh, MasterCard, a little pause today. Meta looks like it's trying to kick out of the hiccup there. Great, that's one we have. Right? So we got the signal here, put it on. It's holding up. We might even have a little bit of money on that one. Maybe it's still breaking even after the weekend. I mean, here I drew my line, and you'll notice that even though we're at the low of it's at the bottom of this line. Is this okay? Yeah. Is it great? Of course not. But I can live with this, and I'm gonna manage through it. So those show some of them. Is there anyone that you might be in from the alerts that I'm not aware of? I don't feel like any others are necessarily in a mess. Yeah, me too. Microsoft, and there are definite setups that I'm like, yeah, if this thing can go, let's see what happens. Let the traders trade. Netflix, Nvidia, maybe in thinking about a setup. We already said that. If you missed PLTR, which I would assume we all did, that was a big entry, and now it's pausing. Okay. PLTR. Okay, you got it. Nice. Love it. Loving it. Pulling back. This was our last support around 130-ish. So if this thing in this area comes back in here, starts to stabilize, and then gives us a kick on up out of there, absolutely. You guys know we're going to trade that. Of course we are. Of course we are. That was my scoff laugh. PLTR, pausing now. Philip Morris. I mean, it's still a strong defensive stock. I don't know why they're like, Walmart's the best defensive. Nah, everyone may still shop at Walmart, but they also still smoke their cigarettes. PayPal, I'm going to drop it. Never really gave a great signal. You can see it's just kind of this one's kicking all the way back and starting to drop even a little bit more. Since I never traded it, I'm going to drop it. I'm willing to put it back at some point. PayPal goes to QQQ, holding up. Roblox just won't give another trade. That was Rivian. This is the end of the line. That's my pullback to sell-off line. Right now, sitting above the 50, sitting on top of this old resistance, which has a tendency to become new support. And I'll give it just a little grace. That's a pullback. Still a big pullback, but it had a big run prior. If it breaks below that, it's no longer a pullback. It's a sell-off, and I'm not interested. Okay, let's see what happens. Let's see what happens. Rocket Lab looks fantastic. It's a beautiful looking setup. I mean, I think it is. I think it's got a great chance of making a run back up. Not necessarily to 33, but definitely 32. That's a nice move. 6 points on a $30 stock. What's wrong with that? Absolutely nothing. RTX. Firefly's notes. I've requested Fireflies try to be better with their summary of notes. Dive into the risk management section of the trading plan outline. Amen. Fireflies, well done today. Well done. I think I'm going to kick RTX too. It had like this insane, I don't know what you call that, vampire fangs. I don't know. Yeah, RTX, you're off the island. SE, setting up. Vampire fangs. I've actually a couple of price patterns that are mine. That one's mine. It's like a V bottom, but it has two in a row. Another one of mine is a shrunken head and shoulders. It's a very rare pattern, but I have seen a few shrunken head and shoulders, and they're quite interesting. SPY, let's go look at today's range and see what we think about it. So we gapped down, ran up, boom, boom, one. Fifth candle broke the range to the downside. So right now, if you're like me and you use a 20-minute opening range, we've broken it to the downside. So there's some concern that we do run down and touch 584. But if you use a 30-minute, you're still establishing it. I don't know. We'll see. Definitely leaning more towards sellers as of right now, what I'm seeing. But we'll see what happens. TPR, off the island. Just don't like the way it moves. There's no reason to keep it around. Tesla giving it back. TSM looks still okay. Twilio still looks okay. Uber, same question. Is this a pullback? Is this a sell-off? Sitting above the 50. Sitting right at this old resistance level. Oh, let's give it a little longer. Bullish dollar index, stable. Visa. So both Visa and MasterCard, a little bit of a hiccup, but all of financials is having that. Here's the VIX. So the VIX looks okay. The VIX looks okay right now. We are, the VIX is definitely, a beacon for us that we want to really orient to right now. to think, is this escalating and we need to start to shut things? Hedge, close, tighten. As of right now, we're all right. Let's keep an eye on this. We do have an hour Q&A session tonight. So if you just want to come and talk about like trades you're in, any lessons learned, I'd love to see those Q&A working sessions start to get a bit more. And there you can see Walmart is actually not looking all that defensive right there, kind of holding up. It's at a record. I think we've gotten as high as like 24 or 5, and it's amazing because we're pretty consistently around 16 to 18 on average these days, because you guys are amazing, of course. You know I think that. 16 to 18 average. Yeah, no, it's and we're actually just starting to hit a couple of things. As I've told you before, I see this as a very delicate ecosystem. Like, I'm not willing to just start injecting, no yahoos in here. We don't want any yahoos coming in and like absorbing and, the energy and whatnot. Right. So we really move purposefully as we grow to make sure that we're bringing on the right types of traders into the group. And so, but so far, like literally, I told him, I said, look, I reserve the right. I actually have this power. You guys might not know it, but with, I told like the partners who run this with me, I said, I have the right to A, remove someone from the room, and B, remove them from the group. Like we can't have them. They're succubuses, right? Not even close. That's what's so amazing about it. So anyways, but I've noticed the same where I'm like, man, we're really just kind of growing at the way that I think is the right way to do it. So, thank you guys. It's, that's, you make the group. Anything we didn't talk about? We're 2 minutes over. There will be, if an alert comes, it will be I will put a hedge alert if it triggers. So be aware that'll come out. I don't see a danger of that right now, but that is something. Anyway, that's it for me. It's great to see you guys. Hope you can make it tonight and chat about it. And if not, tomorrow night, both Glenn and I will be running the foundations, the working sessions. Well, let's see what happens. I'm optimistic. Posture's up. I think the institutions are feeling, even though there's obviously some measure of volatility, I think there's also some stability that we're starting to build on. So anyway, great to see you guys. Have a great rest of your day. As always, happy trading.